Welcome for the part 3 of our end chapter discussions under inventory topic. Number 1. Entity A government entity, purchases inventory to be held for sale in the ordinary course of activities. Which of the following is the correct entry to record the purchases? Letter A. Debit to merchandise inventory, credit to accounts payable. B. Debit to purchases account, and credit to accounts payable. Letter C, A or B depending on the accounting policy being used, and D, none. A government entity cannot hold inventories for sale and only for consumption. So the correct answer is letter A, debit to merchandise inventory account and credit to accounts payable, because the government entity is using a perpetual inventory system. Number 2, Entity A government entity, distributed welfare goods to the intended recipients. The entry to recognize the event is A. Debit to cost of sale and credit to welfare goods for distribution. B. Debit to welfare goods expense and credit to welfare goods for distribution. C. A or B depending on the accounting policy being used. And letter D. None. The expenses is recognized at the end of the period when the physical count is performed. The expense is close to the income summary account. The answer is letter B. For the recognition of an expense of an inventory, we should debit the welfare goods expense and credit the welfare goods for distribution. Number 3, at the year end, Entity A government entity, determines the following information. Carrying amount of goods held for distribution 100,000 pesos, NRV 80,000 pesos, and current replacement cost 90,000 pesos. The question is how much of the carrying amount of the inventory is recognized as expense. Letter A, 10,000 pesos, B, 20,000 pesos, C, 90,000 pesos, and letter D, none of these. The amount of the inventory is recognized as expense is letter A. The basis for that amount is carrying amount with 100,000 pesos is deducted by the current replacement cost, which is 90,000 pesos. Therefore, the difference of the two has an amount of 10,000 pesos. And if you are wondering why we are not using the NRV, NRV is the subsequent measurement for goods held for sale. And here in the carrying amount, it is goods held for distribution. Therefore, we will gonna use current replacement cost in this situation. Therefore, the carrying amount of the inventory that is recognized as an expense is letter A, 10,000 pesos. So for items 4 and 5, Entity A government entity, determines the following information regarding the inventory of goods a non-unique item. So we have the balances as of January 1 with a 3,000 units and 19.55 unit cost with a total cost of 58,650, and we have the two purchases incurred during the month January 6 and January 26. In January 6, we have 10,200 units purchased with a unit cost of 21.5 pesos and a total cost of 219,300. And on January 26, we purchased 2,250 units with a unit cost of 20.8 pesos with a total cost of 46,350 pesos. And then we also have sales during January 7 and January 31. So on January 7, we sold 2,700 units, and on January 31, we sold 7,200 units. Number 4, how much is ending inventory? Letter A, 116,382 pesos. Letter B, 116,495 pesos. Letter C, 117,300 pesos. And letter D, any of these. So the answer for This question is letter A, 116,382 pesos. The solutions will be shown later on. Number 5. How much is the cost of sale? Letter A, 207,805 pesos. Letter B, 207,918 pesos. Letter C, 207,000 pesos. And letter D, any of these. The answer is letter B, 207,918 pesos. So this is the solution for the questions. So we are using the moving average because of the term non-unique items. So we can see that we have added the purchases on January 6 and then deducted the 207,000 units as of January 7, and then added the cost for purchases on January 26 and then deducted once again our last sales on January 31. So we got an ending inventory of 116,382 pesos and a cost of sale of 207,918 pesos. So that would be all for the third part of the problem of the end chapter questions under inventory.